Hey, good afternoon, ladies and gents. Chris here with Green Bar Trading, also known as Ghost of GBT on Reddit. Thank you for tuning in once again for another weekly charting and technical analysis video. Hope everyone had a great new year and a wonderful holiday. We're going to get through a bunch of these today. Looks like we're going to be analyzing Bank of America, NVIDIA, and EA Mike. This was a really funny comment. You can get a NVIDIA analysis from every jackass on the internet. Use your votes for something more interesting. While that is true, there are a lot of jackasses on the internet analyzing NVIDIA. I do like NVIDIA as a trading stock, and I think this is going to be interesting to look at. So we'll look at that one. Plus, a lot of people want to see it anyway. So, but thank you for that comment. That was really funny. Tesla, General Electric, Ford. We'll look at SDRL or SDLP, and then looks like Micron Technology here, CGNX, and a few others. So. If your trade idea got pushed to the bottom for whatever reason, if people just didn't want to see it, or if it just wasn't a popular choice, and you still want to see it analyzed, just post it in the comments of the YouTube video once it's uploaded, and I will get an email that someone had commented, and then I can go and analyze it later on via text. So if you didn't get it, in the top 10, don't worry about it. Just comment on the YouTube video, and I will hit you back there with my thoughts. So let's dive in. Look at Bank of America, long. So Bank of America is a tough one for me. And the reason that it's a tough one is because it has like billions of shares in the float. And if you guys have been watching my videos for a while, you know that one of the biggest things that I look at is how much supply is there in the stock. And with a company like Bank of America that has literally 10 billion shares in the float, it's just going to take an ungodly, almost impossible amount of volume to make it move a lot. And so this is not the type of stock that I would trade, generally speaking, unless there's some kind of a fundamental catalyst, like they released earnings, or there's, like Fed news, like the FOMC, has made a rate decision or something like that that's going to affect the financial markets. It's just not a stock that I would trade because it doesn't move a lot, right? It took... Even on this biggest run in the last 2 years, right? It went from $17 to $20 over the course of 5 days, which, is a gigantic move for Bank of America. But when you look at something like that compared to one of these little low float stocks like Sempra Pharmaceuticals here, which we traded on Friday, from 325 or 330 up to a high of 385 in after hours. That is 385 divided by 325. That's an 18.4% gain versus 20 divided by 17. All right, it's a 17.4% gain, 17.6% gain over the course of 5 days versus an 18% gain in 1 day. All right, so these little, and that's actually not even, that's not even really big, right? That's a nice gain for 1 day. But then you have stuff like ETRM and Teramedics here that announced some new news about their V-block technology being available in some new hospitals. It goes from $2 to $10, 500% return in 2 days. So that's the kind of stock that I usually trade. So Bank of America, while it's it's a nice chart, it's liquid, meaning it trades a ton of volume. It's still, even though it trades 80 million shares a day or 100 million shares a day, it's just not enough to really get it moving. So I wouldn't trade this. Also, if you look at Bank of America compared to the S&P 500, if we look at a daily chart of both just kind of on top of each other, you can see they look almost identical. And so if you believe that the S&P 500 is going to continue to rise, then Bank of America is probably a good trade, as long as you are patient enough, to let this thing run for a few months, right? And it's going to take you a while to make any significant amount of money on it. So those are my thoughts on Bank of America. I'm not really a huge fan of trades like this. If the SPY keeps going up, the S&P 500 keeps going up, then Bank of America is going to keep going up with it most likely. But then you're going to deal with FOMC announcements, you're going to deal with the Fed, you're going to deal with overseas news, you're going to deal with stuff coming out of Russia and the Trump administration making comments and all that kind of stuff. And all of that is going to affect Bank of America. So what I like to do is focus on the stuff that does not really is not glued to the market so much. So, the S&P 500 decides it wants to take a dump and screw everybody. Arrowhead Research, for example, is most likely just going to keep doing its thing. It's going to keep going up regardless, or sometimes these stocks will just keep going down even when the SPY is ripping. So I like to find stuff that moves regardless of what the market's doing. So I personally would not trade Bank of America, but it does have a decent chart. It's super liquid as long as you're patient. Next up, NVIDIA short. So this is an interesting one. I have not looked at this in a few days. I do like this for a short. I like this for a short actually a while ago, before Citron posted their article, giving it a $90 price target or whatever, up at $120. This thing was extremely extended. If you look at the weekly chart at $120, we've gone from $25 a share in early 2016 to $125 by the end of 2016, or 120. So I mean, that's a huge move, especially for a legitimate company like NVIDIA. You see these little crappy biotechs and stuff. They go out and run 100% or 200% or whatever. They do that all the time. But you don't usually see that in stocks like NVIDIA, or AMD was another huge one this year, from $2 all the way up to $12 by the end of the year. These are big companies, right? They're multi-billion-dollar companies. They have real products and services. So to see a run like that is really something extraordinary. So with that said, NVIDIA was a fantastic short up in the 110, 120 range. I do still think that this has a lot of room to fall back. So I like it for a short, potentially even lower than Citron's target, right? Citron gave it a $90 price target over the next 6 months or a year or whatever. I personally think it even goes lower than that. If we look at the weekly chart and just kind of eyeball this trend line, it would almost even make sense to see this thing come back to potentially like the 75 to 65 range and still be okay. It could still maintain this clean uptrend on the weekly chart, even if it came all the way back to 65 or 75. So this does definitely have a lot of potential for a short in it. The problem is, these things can stay overbought for months or years even, as we can see, right? This thing's been overbought since like July, and yet here we are, another 50% higher in January of the following year. So, 6 or 7 months, it was overbought the entire time, and it just keeps going, right? They keep releasing good earnings. They keep releasing positive news. There's more and more hype about new gaming systems and new systems that their cards are going to be used in or whatever. So it can keep going. So my only caution on this would be, I like it for a short. I would say definitely if it cracks under 100, that's going to be a big thing, right? Just because it's a round number. So if it breaks 100, that would be sort of my trigger. And then you would use 100 as your stop loss, right? If it comes back over it and doesn't hold under 100, then that would be my stop loss. Short term, I could see this, within like the next week or so, maybe drop down to like 95. So if it cracks 100, there's a good chance of what you see is just, straight face plant to 95 in a single day, or 1 or 2 days. And then if it gets below this sort of post earnings high, the last time they had their earnings, it kind of peaked out around 95, and it was, having some trouble getting over that for about a month. So that 95 is going to be a big support level for it. If it can get below that, then I would say, probably under here, which as you can see comes right back up to 95. So I guess below that, maybe the earnings day highs of 88 to 90, which is just about Citron's target. So somewhere in that channel would be a good short-term target over the next few weeks probably. Let's just look at a 5-minute chart of it. I got to link up this chart, 5 minutes. I'll look at like a 15-minute chart here and see how that 100 looks, or a 30-minute chart. Yeah, so I mean, if it can break sort of this area here, that would sort of be the trigger, I guess. And you can see it was actually $100 was resistance over here as well. So if you just kind of extrapolate that line across, there you go. There's your $100 breakdown. Right now, if you wanted to short it at this exact spot, your stop loss is just going to be if it breaks over this upper trend line here. So if it busts, say, 105 or 106 and holds above 105, 106, then I would take it off and just call it a loss, because this stock is so strong and it's a real company that makes real money, that you don't want to get trapped holding this, right? So you don't want to hold it short, because if you're short, there's no limit to how much you can lose. So just keep that in mind. If you are shorting this is not a stock to get trapped in, because you'd be surprised how quickly they can go against you and how quickly those losses can add up. So there you go. Those are my thoughts on NVIDIA. Let's move on to Tesla. Big companies today. Bank of America, NVIDIA, Tesla. I miss my crappy little $1 million biotechs. Tesla long. So Tesla, I guess on like the 30-minute chart here, it sort of had a nice breakout over 228. Let's see what a 5-minute looks like. Yeah, so it seems like that 228, 227.50 area was sort of the resistance point, but it still has a lot to get through. You see all these highs over here on the daily chart. You've got, once it gets above 228, you've got, it looks like it went up to about 230 and a half or so on Friday. So if we go back on the daily chart and just look at anything that is above 230 and a half, it needs to get through those areas before it can have like a real big breakout. And so you can see, 229.50, 231.53, 232, and then you're up to 236. So if you want to buy this for a break over, say, 230, then you need to do it on a dip down into this area. Because if you try to do it, chasing through 230, then the first thing you're going to do is run into resistance at 231.50. And then above that, you're going to run into resistance at 232. And then once you get over 232, then you're clear up to, say, 236.63 here, where this high is. And above that, the next most recent high would be 240.84 and a half, right? So, 236, from 232 to 236 is going to be a big, quick move. From 236 to 240, or almost 241 actually, is going to be a big, quick move. So you've got about a $4 difference there. So you have a couple of breakout points, 236 and 232, which are going to potentially give you about $4 worth of upside. So that's obviously really nice. But right now, buying it at 230 or so is just, you've only got like $1 or $2 of upside before it hits resistance. So you need to make sure that you are buying it when you have minimal risk. You don't want to risk $4 a share to make $2 a share, because that just doesn't make any sense mathematically. And if you do that over time, and unless you win 100% of your trades, you're going to lose. Statistically speaking, you're going to lose over time. So those would be my thoughts on Tesla. I do like it. It's actually a low float stock, despite the fact that it's a pretty big company. Only 129 million shares in the float. And the other thing that I really like about Tesla is this short interest. 27.43% of the people in it are holding it short, which means if it breaks out, 27.5% of the people that are holding it are losing money, which means they're going to panic and buy to get out. So that's obviously a good thing if you're long. So there you go. There's Tesla. Next up, General Electric. This is another one like Bank of America. I can say before even looking at the chart, I would not trade this, period. Just because its range is too small, it moves too slowly, and it has too much supply. As a short-term trader, you need to be finding stuff that's going to give you, a 10, 15, 20% gain in a single day, right? Unless you've got, a stock like General Electric, it's $32 a share. If you got a $5 million account or a $10 million account, and you can buy, 100,000 shares of this thing and actually hold that, for a 3 or 4% move, that's great, right? You invest $5 million and you hold it for one day, and you make 5% on it or whatever. That's great. But I don't have a $5 million account. And I'm guessing that most of you guys don't either. So if you don't have a $5 million account or a $10 million account, then you got to find stuff that's going to give you more bang for your buck. So I would not trade General Electric. It does look like it has a little consolidation going on here. That's fine. Just like Bank of America. It looks like a bullish chart, but you really want to tie up, $32 a share. I don't know if even if you got like a $10,000 account, right? Do you want to tie up $10,000 for 2 months to make 10%? It's just not even worth it. $1,000 over the course of 2 months. I mean, you can make $1,000 in a day trading one of these little biotech companies. So just some food for thought there. So I wouldn't touch GE, just not my style of stock. Same deal with Ford, even though the pattern might be nice. And in this case, whoops, that's not even the right Ford. Hold on. Let's try F. There we go. So even though the pattern might be nice, all right, you got this bounce off the 200-day moving average. Where's it really going to go? I mean, you buy it at $12.80. Where's it going to go? $13? If you got 1,000 shares of it, right, which is what? $12,800, and it goes to $13, which is probably, normal for it. 20, 30 cent move in one day, maybe like 40 cents if you're lucky. You make $300 or $400. That's great, I guess, if you can do it every day, but it's going to tie up 13 grand. So, if you're trading a smaller account, $1,000 or $2,000 or $5,000 or something like that, you're only going to make like $100 on this, and it's just not really worth it. So you can find better uses for your money. So far, Bank of America, NVIDIA, Tesla, General Electric, Ford. Let's look at SDLP. So SDLP, first of all, is a Seadrill. This is the partnership, I believe. Yeah, so this is a LLC, and then there's SDRL, which I think is the LTD. I personally, so these will move almost in unison. I personally prefer to trade, SDLP. I personally prefer to trade SDRL versus SDLP just because they're going to move the same. Generally speaking, one goes up, they both go up. One goes down, they both go down. I personally like Seadrill just because if you look at SDLP, the average volume is only about 700,000 shares a day, which is a little bit thin. And it's just, it's going to be more volatile and more wicky, meaning, lots of spikes up and spikes down without like a lot of liquidity to get in and out. Versus if you look at SDRL, this thing does 10 million shares a day. It's a little bit high on the float side, but it also has 25% short interest. So I personally like Seadrill a little bit better than SDLP, but I do like the chart in general. It's an oil stock, obviously, so you want to be paying attention to the oil market. So you want to look at like USO, see what USO looks like. USO has encountered some pretty hefty resistance here at $12. And so that's going to be your key breakout spot. USO gets above $12, and then especially if it gets above this 1250 to 1270 area where it ran into resistance before, then you've got, a potentially really big move in oil. You could see this thing pop up to 1430, 1450 area, possibly even 15. So if you get a $6 or $7, $5 or $6 run in USO in the United States Oil Fund, then these stocks like Seadrill are going to do shit like you see over here, where it went from $1.50 to $8.50 in 5 days. So these stocks can definitely move. Seadrill's a great one, or SDLP, whatever. Seadrill's a good one. WLL, Whiting Petroleum, is another good one, very similar to Seadrill. BCEI, Bonanza Creek Energy, fantastic stock for trading oil runs. You get a big run in the oil market. So, look for these low float stocks. What you should do is basically go to FinViz and type in, start with maybe SDRL, and then, you can click on here, oil and gas drilling and exploration. and then I'll give you all of the symbols that are in that same industry. There's also, obviously, oil and gas pipelines, equipment and services, refining and marketing, and then there's a couple of other ones. Major integrated oil and gas, and then I think independent oil and gas are always good ones too. But what you want to focus on is not necessarily the ticker or the size of the company or the chart, but focus on the float, right? So like Anadarko, I wouldn't trade this, right? Because it's got 550 million shares in the float. There's only 2% short interest on it. It takes a lot of volume to move 550 million shares in float. Whereas if you trade something like BCEI, there's only 50 million shares in the float, right? So if this thing does 50 million shares in a day, which is very possible, BCEI will rotate literally every single share that's available to be traded. Will rotate it multiple times. You have stuff like ETRM. Thing's got 1 million shares outstanding. That's why you see a spike from $2 to $10 in 2 days, right? Because there's only 1 million shares available to trade. And look at the volume. The last 2 days, the first day it took off, it did 19.75 million shares, 20 times the float in a single day. The next day, the same million shares rotated over 35 times, so 35.1 million shares. That's why you see such gigantic moves. So these Seadrill, WLL, BCEI, the low float oil plays, those are the ones that are going to go. So, it's not just SDLP. I like this pattern. There's nothing super special about it, but, watch that USO, especially at the $12 level, and make sure that it's going to hold this lower trend line that it's been developing here above about 1135 or so. If it breaks below that, then we're probably going to see a pullback into the 200-day moving average, or possibly like the middle of this range here, where it's just kind of oscillating around this range above 1050. So there's a lot of questions on where this is going to go, I think, but it's at an interesting spot for sure. It's doing a nice consolidation. We have rising lows. It's above the 200-day moving average. The market's strong. If oil takes off, all these little names like Bonanza Creek and Whiting and Seadrill, they're all going to go. So good idea for sure. And why is my keyboard suddenly not working? There we go. Damn it. Come on, computer. What the hell are you doing? I think my knee is blocking my Bluetooth reception. Okay, here we go. All right, so next up, Micron, MU. Let's get rid of some of these other ones. MU. Not really a fan of this. MU long. Looks like it's about to die. Look at the 30-minute chart. It's got this like nasty kind of downtrend going, just basing right above $22. If it holds that area, this is a good spot to buy it, I would think. But to me, it looks like it's trying to fill this gap back to 21. So I would expect more likely a bounce off of 21. However, if it does hold 22, you can buy it at 22.30 or 22.40, put your stop loss under 22, and let it rip. This is another higher float stock, almost 1 billion shares in the float. So it does move slow, but it's sort of like AMD, and these semiconductor companies like AMD and NVIDIA and SMCI, for example, these things have been hot. That's not even actually they're not technically networking communication devices, but anyway, these semiconductors, there's a bunch of them, right? LEDs, NLST, Rambus. These things, they've been hot lately. It's all basically sympathy off of these gigantic runs in AMD and NVIDIA. So anyway, if it holds 22, then it's good. Just make sure you keep your stop loss underneath $22, because if it cracks 22, it's most likely going to gap fill back down to 21. And, you can take a real low risk trade there at 22. I mean, you could just buy it like right above 22 and just set your stop loss under it, risk, 5 cents to make 50 cents or something like that. That's a great reward to risk. The probability on it, I'm not sure, just because it has so many shares in the float and it kind of looks like it wants to gap fill. Plus the market's extended. You know, the market's kind of at resistance again, so we might see after this 4 or 5 day bounce that we've had over the last 4 or 5 days, we might see a little bit of a rest or a pullback in the market, which is going to take stocks like MU and NVIDIA and AMD and actually even Tesla and Bank of America. All of these names, you know, are going to be glued to the S&P 500. So if one goes down, they all go down. So just something to keep in mind. Overall, though, nice chart. I like it. Next up. So we're skipping over this one just because it's Toronto and I don't have access to the TSX. CGNX, what are you? Never heard of it. I've traded this before, but Cognex Corporation. Okay. Cognex long. So this is nice. I like this chart. What kind of company is this? Finviz. What say you? Scientific and Technical Instruments. What do they make? Calculators or something? Let's see. Machine vision products that capture and analyze visual information in order to automate tasks, primarily in manufacturing processes. So like OCR maybe? Manufacture and tracking of discrete items such as mobile phones, aspirin bottles, and automobile tires by locating, identifying, inspecting, and measuring them during the manufacturing or distribution process. That's cool. So it's like a quality control type of thing that takes the human interaction out of analyzing quality of devices that are being made. That's kind of cool. 81.6 million shares in the float, so that's good. Under 100 million is sort of my cutoff. I like to trade stuff that's under 100 million shares float just because that way it's going to move faster. Short float could be a little bit higher. In other words, there's only 5% of the people in it that are holding it short. I like to see as high as possible, really, just because that means when they take off, all the shorts get their asses handed to them and they're forced to buy to get out of their position, which just causes more upside. So this one could be a little bit higher, but it's not a deal breaker by any means. Average volume is a little bit low at only 550,000 shares. I prefer to have a million or so, but not the end of the world. 550K is doable. As long as it's, you know, the chart doesn't have gaps and stuff all over it, then it's easy to trade generally. So technically speaking, let's look at what we could expect out of it. It seems like this kind of downtrending, well, it's not really even downtrending, it's just consolidating. It seems like that 65 spot is sort of the big area. One of the things I like to do when I'm looking at a chart like this where it's in sort of a tight range and all of the highs kind of seem like they're in the same area, your resistance is the highs, right? So I look at the biggest, the highest high, right, which right now is 65.95. So if it gets above 65.95, that's sort of the big, all-time breakout where, barring anything on the weekly chart that I'm not seeing, which, no, this is definitely still running to all-time highs as far back as, 1996. So still running. But one of the things that I like to do when I can't really tell what the exact resistance is go to like a 60-minute or a 30-minute chart. And that makes it just a little bit clearer where that resistance lies. So to me, this one looks like somewhere between 64.50 and 65 is going to be the trigger for when it breaks out. If you're the type of person that likes to anticipate trades, then buy it now basically and set your stop loss underneath this support level here at $63, maybe 62.50 or something like that. And there you go. I think this can definitely move. It's obviously capable, as we can see over here. It went from, under $60 to 64 in one day, and then had a couple days of follow-up where it ran another couple dollars a share. It's pretty easy to see, in just a few days, this thing goes from 58 to 66, $10 a share. That's almost $10 a share. So it's, that's a nice move. So it seems like it has the potential to move. It seems like also they're pretty consistently ripping on their earnings. May, August, had another gap up and fade, but again, came right back. And so their earnings are probably going to be coming up. Let's see, November, December, January. Probably like early February, their earnings will be coming up again. I'm assuming these are earnings anyways, just because they're 3 months apart. But it looks like they've been kicking ass on their earnings, so that's always a good thing. But yeah, not bad. Would I trade it? Probably not, just because I'm greedy and I like to make 100% in one day instead of 10%. But what can you do? Still a nice chart. Next up, RUBI, and then SHLD, which I love. Maybe not short, though. We shall see. Mr. Big Bear 0083, the fearless leader of the stock market subreddit. RUBI, SHLD, and then DEPO and ALDW. I think that'll probably do it for the top 10. DEPO. Is this Aldi's? No, Alton USA. All right, so how many is that? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. All right, we'll go through 11. Actually, just because this guy specifically asked me to do that. Okay, so RUBI, Rubicon Project. This is interesting. I like this. I love these kinds of sort of beaten down daily charts. Like Sempra was one just recently. You know, they had their drug was denied FDA approval. And, you know, they just get crushed, right? But now the worst of it's over, and it runs from 250 up to 385 within just 5 or 6 days. You know, that's a fantastic move. And it still has this humongous gap to fill all the way up to the 560s. So I love these beaten down daily charts. So this is a nice one. I would say probably, it looks like $8 is going to be the key. If you scroll across the daily chart, you can see all these highs. $8, $8.14, $8.05, $8.15. And then above that, you've got the 820s and then 850s. So, you know, it's not a huge breakout type stock. I would think that, you know, you probably get a quick move from 8 to 850. And then if it could get above 850, which is most likely going to take a while, but if it could get above 850, then you have a big move from 850 up to 950. All right, this high over here, 930 technically. And then above 10, obviously, is the huge breakout, but that's a ways away still. But this looks good. I like definitely where it's going. Right now, seems like it's just kind of chilling on this uptrend and underneath this resistance. So it's still sort of in coil mode. What I'd be watching for on this is just to see how it reacts once it gets towards $8. You know, so I want to see it set up nice and cleanly at $8, right? Where it gets into a nice tight coiling pattern like this, where you have very, very minimal risk right here, where you can buy this thing at $8.05 and set your stop loss at $7.98, right? And risk 7 cents to potentially make $2 or $3 a share, right? That's a great trade because you can invest basically as much as you have available and you're only risking 7 cents. So that's what I'm looking for on this. Obviously, it's nicer if it actually works instead of what it did last time, which is hit $8 and then tank all the way back to 7. But sometimes it takes 3 or 4 tries for these things to get over. But look for this type of pattern once it gets up towards $8. And then the trigger would be sometime early in the morning, you're going to see a big volume spike and a breakout through $8. And once it holds above $8, that's sort of your trigger to get in and go with it. So there's RUBI. Let's take a look at Sears Holdings. Love this stock, even though it's a big company. They have a ton of shorts because everybody hates it because they don't make any money. Because it's Sears, and who goes to Sears anymore? No one. So SHLD, 71 million shares in the float, 21.28% short interest. Nice average volume, almost 1 million shares, so that's good. Do I want to short it? Yeah. I mean, this is actually not bad. I mean, normally I don't short stocks that have super high short interest, or if I do, you know, it'll be like a quick trade. But it looks like it rejected this $11 resistance. You see this old support here at like 11 bucks? It was sitting right above that for quite a while. It tried to get over it and then it failed. Broke down, came back, retested it, and now it has rejected it again. So to me, that says this is the stop loss, right? This $10.50, $11 area. If it reclaims that area and breaks back above it, then, you know, the trade is over. You're wrong, right? But if it holds underneath that, you have a pretty low risk spot to get it right now. It's a little extended on the 60-minute, obviously, for a buy right now. But, you know, if it pops back up, I don't know, maybe like a $10 rejection, since you have the big round number right there at 10 bucks. You can see it had a big breakout over the top of it, and now it's sort of refailed $10. So if it gets back up to, you know, maybe 10 bucks, that would be like the spot where I would short it. And, you know, $10 entry, maybe like a $10.50 or $11 stop, right? So you risk 50 cents to $1 a share, and your target would be to crack these lows here at 8 bucks. So if you could get it above 10, that might even be better. But then, of course, you have the risk of $10 potentially becoming support and doing this, you know, where it just kind of, instead of being resistance, it breaks back above, and then $10 becomes gigantic support, and it bounces off it for 2 weeks and does nothing or takes off. But I do like this. I think it might be a little bit late. I would have loved to short this thing at 11, but I was not watching it. But overall, it looks good. So good idea. Also, just be careful because it does have, like I said, it's got 21.28% short interest. So if it gets good news and it takes off, 21% of the people that are in it are, you know, going to be crying. Last one here, second to last one, DEPO short. So DEPO Med, damn, this thing looks ugly. Some kind of nasty news here on the 6th, or maybe the 4th. DEPO Med jumped on reports of takeover interest. So this is a takeover rumor, and then potentially everybody either changed their minds or they came out and said, no, it's bullshit and there is no takeover. So we don't know. I don't personally know. I wasn't following the news on this, but I do remember that it popped up on a takeover rumor. Short right now, I mean, I think the short was like back here at 20 bucks or 20.75, but it's still pretty low risk if it can hold underneath 20 or hold underneath, let's say hold underneath 19.50, and it's got support at 19 bucks, low of 19.05, and here low of 18.91. So it's got support at 19. So you got to keep your risk tight on it at this point because you're kind of chasing it a little in terms of the short. But, you know, that doesn't mean that you can't risk 25 cents for this thing to potentially break under 19 and drop to 18, right? That's still 4-1. You risk 25 cents to make a buck. That's great. You know, if you do that on every single trade, then you can lose 75% of your trades and still make money. So that's still a good risk versus reward ratio. You just want to, you know, make sure you actually honor that stop loss and consider how much it came down, you know, this one day. It might need like a little bounce. Another way you could play it is potentially a rejection off of the 200-day moving average here, right at $20. So if it bounces off 19, you know, you short it at 20 bucks and put your stop loss just above 20, or in case it holds above 20 and starts to reclaim and hold that 200-day moving average, that might be, you know, a good area for it. So that's another way you could play it. So nice. I like it. Last one, and also, as you guys know, I love shorting. So anytime a company is distressed or facing imminent destruction, that's like my favorite thing in the world, which is kind of sick and sad, but that's just how I am. So ALDW, last one, Alon USA Partners. I'm not sure who this is. Oil and gas. So this one can just be lumped in with the stuff we were talking about earlier with USO, Seadrill, BCEI. This is super low float, only 11.5 million shares. Not very much short interest. But yeah, I mean, especially since it's like bouncing off of this $10 mark right now, and off of the 200-day moving average, I actually really like this. The only concern that I would have is it's a little bit thin. And what I mean by that is it just doesn't really trade much volume. So that makes it difficult to get in and out if you've got a bigger position size. So it depends on the size of the account you're trading, right? But if you're trading a $100,000 account, you've got 4-to-1 leverage on it, and you got almost $500,000 to trade with. This is a tough kind of stock to trade because you're going to probably be buying 10,000 or 20,000 shares, and then you got to sell 20,000 shares into a stock that only trades 100,000 a day, right? So you don't want to be making up 20% of the daily volume on one of these stocks. If you're trading a small account, 30K or whatever, then maybe, you buy 1,000 or 2,000 shares. That's going to be no problem to get in and out of. Just be aware that, it looks like it can be a little bit spiky. You see these candles over here on the 5-minute chart. You drop from 1074 to 1059. If you got 2,000 shares, that's a $300 swing in, 5 minutes. And then it dropped really quickly after that from 1060 down to 1040, which is another $400 swing, right? So it's really easy to lose $600 or $700 on something like this if you get trapped in it with too many shares. So that would be my only concern. Just make sure that you keep your stop loss tight. And if you have access to level 2, that would be amazing, because that way you can look at, the bids and asks in real time and see when there actually is support for you and not just look at the chart. So there you go, ladies and gentlemen. I hope this was helpful. If I didn't get to your idea, once again, like I said, feel free to just post your same idea in the comments of the YouTube video, and I will get to them via text at some point this week, hopefully early in the week if you're looking for a trade on Monday or something like that. But that's it. So thanks once again, like I said, for tuning in, and like, comment, subscribe, all that fun stuff. And I will see you next week. All right. Peace.